way to start the week, Mark.
Yeah.
How surprised were you by this latest chapter, and what does it do to your models across the space?
What a way to start the week, but kind of getting used to it these days. Yeah, it is a typical Monday in Fangland. But not a surprise in that some of these reports have been bubbling up. Obviously, on Friday, late Friday, we got word that this is something maybe brewing. Look, it's hard to ignore the fact that these companies have benefited a lot from a fairly loose regulatory environment over the years and the ability to leverage a lot of consumer data to drive their ad businesses. So hard to ignore that. Not surprising that the regulators are continuing to look into these situations. Ultimately, I think that this is going to take a long time to resolve, and some of the previous cases that we've seen, especially in the EU, have ultimately not resulted in major fines or business model changes. So, things could certainly be different this time around, but not a great news cycle this week. Not, and there might be more to come. But ultimately, if you're a long-term investor, I think this is something that Facebook and Google and the other FANG companies can get behind.
Is there,
get behind.
On the spectrum, though, of regulatory risk, which of the 5 letters in FANG deserves the most worry?
Yeah, so, I'd say part of this is what's baked into the stock. Now, Google's been one of the companies that has been able to not be, certainly in the EU, they've been in the crosshairs, but in the US, it's really the target's been on Facebook. So from a new information perspective, Alphabet is really the one that we're a little, where there's new information to be concerned about. But a lot of the data that Google uses is used within their platform, and users know what they're doing, right? When you do a search on Google, you know that you're giving information, and that information's being used to target ads. Now, the other companies, that's not that trade-off hasn't been as clear set. So I think that might be part of the delineation. Is there consumer harm? That might be a little bit easier to prove on the Facebook side than the Google side.
Right.
Yeah.
David, your portfolio is invested in Apple, Facebook, Alphabet, to name a few. As an investor in these names, would this change any of these headlines we've seen, the potential for regulatory risks ratcheting up? Would it change your stance on these companies?
Yeah, I think you have to look at each company independently. I mean, Facebook has been through the crosshairs of late. When I think about Apple, and if you look at the extreme of antitrust and could Alphabet be broken up, I'd take a page out of the old Standard Oil antitrust back in the day. Alphabet shareholders might be crying all the way to the bank if they had to break it up. I think that there's some undervalued properties there, but that's even an extreme thought. And then on Apple, we've owned Apple since 2005. We've been through a lot of different things with Apple over the years, but no doubt about it, these headlines, the prospect for a regulatory overview, it's a wet blanket on the multiple. I think Tim Cook tried to get out in front of this yesterday in an interview saying, hey, they really don't have monopoly position in anything. I think the exception to that is the App Store. That probably would be the focus of regulators. I think it's a monopoly. I think it's very dominant. It's a great asset for Apple. But again, it's just again a wet blanket. I mean, Apple's stock's been flat now, at least in the 170s. The first time it hit 170 was all the way back in early November 2017. So I don't know how much of this regulatory is baked into the price. Probably not much right now. But Apple at 13 times next year's earnings, it's really not demanding at all.
Well, David, I mean, the regulatory scrutiny is one thing, but it's regulatory scrutiny over a part of Apple's business that we thought, or maybe still believe, was going to replace the phone cycle as their main source of artillery, right? That services would be the future. So it's not where you'd want to see regulatory risk. No, you're absolutely right. When you consider that Apple has 1.4 billion device users, over 900 iPhone, over 100 million Mac, 400 million iPads. All that developer information at WWDC yesterday was great for that. But yeah, you look at the ecosystem of Apple on a global basis,
it's gigantic, and it's probably going to have this type of regulatory review, and government officials probably looking at it ongoing for years to come. It's just that gigantic.
Mark, when you see so many tech names down double digits just over the past month, do you see buying opportunities here?
I think so. Again, if you're a longer-term investor, I think there is value here. Look at Google and Facebook alone. You're now trading at 15, 16 times earnings. This is, in line with some of the consumer, staples names and growing multiple times, faster, even with the slowdown in the business that we've seen at Facebook and Google lately, still growing at 15, 20%. Top line trading at 15, 16 times GAAP earnings. So I think there's a lot of value here. Again, if you're a longer term investor, I think the other thing that you do is you look at how the regulatory issues have played out, both at the FTC here in the U.S., where nothing ultimately happened with Google, or the two relevant settlements out of the EU that ultimately didn't really change business practices and resulted in a combined fine of $4.4 billion, very digestible by Google. I think if you're a long-term investor, you see this as an opportunity. With the market cap losses that you saw yesterday, given the likely outcome, if there's even formal investigations that are launched, you probably see this as an opportunity.
Right. Safe to say, fines in general are really not a material concern, right?
No,
it's going to be pocket change.
Right. It's more around the business model changes that could result in this. And if we look at what the EU asked of Google to change, ultimately it didn't really have an impact. And the reason is that what Google has been doing that some, advertisers and businesses are concerned about, say like, Yelp and some of these other companies that have been vocal, is Google is trying to narrow down the search results and make them more refined, right? And rather than you getting a link back of a search result back with 20 results and good luck. They're trying to refine that search, and they're going to be winners and losers in that process. And I think that ultimately, I don't see the consumer harm in that. And, I think that's ultimately what will be found out here, in the future.